The OBV Divergence indicator is available for various platforms on the TradingFinder website. From this section, you can download the indicator file for MetaTrader 4 and MetaTrader 5 platforms and run it on your chart. Additionally, traders can read this page to learn about how the indicator works and its functionality. From the Navigator section, we select the indicator file and run the indicator by dragging the file onto the chart. Once the indicator is running on the chart, it starts displaying positive and negative OBV divergences on the price chart. Traders can use the OBV Divergence indicator or On-Balance-Volume Divergence to identify positive and negative divergences as lines on the chart, or they can review positive and negative divergences within the chart based on the divergence table. If volume and price divergences form on the chart, the indicator will start drawing trend lines in a positive color and with the symbol positive RD displaying positive divergences. After a divergence forms, there is a possibility of a price reversal. And if negative divergences form on the chart, it displays the divergence with red lines, and by drawing it on the peak with the symbol negative RD, it indicates the negative divergence. In the table section, we can review the details and information related to the most recent divergence. And if a divergence forms and it is negative, it will be displayed in the bearish section, and if it is positive, it will be shown in the bullish section. It examines the divergence across 4 different rows. In the first row, it shows the type of divergence, whether it is bearish or bullish. In the second row, we can examine the number of consecutive divergences, showing how many times divergences of that type have occurred. Here, the last divergence is a negative one, and it has happened twice, so it displays both occurrences for us. In the third row, we can assess the strength of the divergence, which is identified and displayed in 3 states: normal, good, and strong. This indicates the likelihood of a trend reversal for us. And finally, in the 4th row, it shows us the change phase or the probability of a phase shift. When a clear divergence forms, important signals are typically generated with a noticeable delay of 3 to 4 subsequent candles. Following this, we can then confidently enter a buy or sell trade within the market. In the settings section, specifically under the input category, there are only 3 distinct options currently available. Within the very first input field, we have the ability to precisely set the absolute minimum number of candles that are truly required to accurately identify a particular price wave. And the higher this value is set, the longer the wave and the broader the calculation basis will be. By default, a minimum of 4 candles is considered. In the second input, we can enable or disable the display of the table. And in the third input, we can enable or disable the display of divergence labels here. The final point that we truly need to pay careful attention to is located in the lower section. It is important to note that sometimes the price action may indeed break through the established divergence lines, either moving significantly downward or sharply upward. These particular divergence lines, which are key indicators, can occur and be observed up to a maximum of 2 distinct times within the analysis period. This means that if a divergence forms and the price breaks the divergence either downward or upward, it counts as 1 time. And if the divergence lines are broken a second time, that divergence line is considered failed and will not be displayed. Alright friends, we've reached the end of this indicator tutorial. We'd be happy if you share your comments and suggestions with us in the comments section.